Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode 333. So we are going strong in number of episodes now. Triple three episodes started from 2021 May. Trying to do it this daily so that we can get some information to all our users and even non-users of weekend investing products. Um, the idea is to share whatever we are learning with the rest of the market. Today's topic is don't stay married to underperforming stock. You already know this well if you have been following this channel, that our primary theme in momentum investing is to let your profits run and book your losses early, which also means that you don't want to be stuck with any stock that is not performing for a any longer period of time. Once again, a reminder to all weekend investing subscribers. There is a program called Wild, the Weekend Investing Loyalty Discount Program. This is the first of its kind program launched by any small case manager, where with each subsequent year, your subscription prices gets reduced, just like a comprehensive insurance works in your vehicle. Uh, the discounts are automatically enabled when you go to resubscribe, so you don't have to put anything in. But just in case there is a technical error, you can always use this format to put the code in, or you can always drop us an email and we'll help you out. But additionally, more than resubscribing to your existing strategy, you can also use the same code to subscribe to any other weekend investing strategy. So this is something that we are aggressively wanting all weekend investors to know, since it's a new program launched only from 1st of January. Not very many people have come to know about it, and hence this daily emphasis to go through this exercise. Uh, the markets since end of December have been stuck in this range of 17,750, 17,800 on the downside, and about 18,200, 300 on the upside. And you can see that the range is getting narrower as we go along. So it is, coiling into a narrow range, and that narrow range will uncoil as it always does. So whether we will break through this huge support and go much lower, or we will just jiggle around here and then create a new leg up, is something that is to be seen. But both these possibilities remain open. I am of course biased towards the long side, given that we are running mostly long only products. And India has remained in a reasonably, I would say, sanguine situation despite negative headwinds from all over the place. PSU banks, the results are trickling in. We saw results of Bank of Maharashtra today. We saw Federal Bank results today. Private banking, HDFC Bank came out with good numbers. So banking, the credit offtake, all looks to be reasonably robust, and quite I think beating the market expectations also. So from that perspective, the economy looks to be in a fine fettle. IT stocks also recovering, with Nasdaq also stabilizing a bit for now. Energy stocks up a bit, 0.6%, but the rest of the sectors were uh, in a bit of a limbo today. Metals losing 1.3% and autos losing 0.7% at the worst. Overall, broader indices, you can see did went nowhere. Nifty down 0.34%, CNX 500 0.2%, mid and small caps 0.19%. Nifty next 50 and small caps were virtually flat. In terms of weekend investing performances, NNF 10 up 1%, Evergreen up half a percent, MI 30, NG 50 all doing better than uh, quarter percent, MI ATH 2 also quarter percent, and India top 10 and LTC next 200, ATH losing some ground here. But pretty much a nothing, no action sort of a day. In terms of the total heat map for the Nifty, we can see some deep reds in Axis Bank, Adani Enterprises, both these stocks down more than 2 to 3%. Tech Mahindra was the sole green stock here at plus 3%. Wipro, HCL Tech, Infosys also up about 1.5%. TCS was, however, down minus 1.2%. HDFC Bank, after a good result, also down minus 1%. So everything is already baked in. HDFC also down minus 1%. ICICI Bank also down minus 1%. SBI Life also down 1%. Levers, Reliance also down 1% each. So there was a reasonable corrective mode going today. Coming back to the topic of the day, don't stay married to underperforming stocks. There was a tweet today that some people are not able to get the 2018 star stocks out of their heads. What happens usually is that, once we encounter stocks that have really done well for us, we think that they will continue to keep doing so well every year, year after year, decades after decade. That doesn't happen, right? There is always a concentrated move in stocks, just like in any other asset class. If you notice, even in real estate, for instance, if we look at last 20 years, there were maybe two pockets, 2004 to 2011. I'm talking about more North India market. That's what I'm familiar with. And then more recently in the last couple of years in certain pockets. So concentrated moves, and then, lull of 5 years, 7 years. Concentrated move, lull of 5 years, 7 years. That's what happened in many other asset classes. Gold moved from 2003 to 2011. I went from 5,000 rupees per 10 grams to 30,000 rupees per 10 grams. 6x move in about 8 years' time. And then, next 5 years, no change. And now suddenly doubled in the next 2 years again. So from 30, it has gone to now 58,000 within a matter of last few years. Nifty also moves the same way. You saw Nifty going from 8,000 post COVID to 18,000 within a year and a half. And now we've spent a year and a half doing nothing, going sideways. So stocks also move the same way. They will give you huge gains, and then, unless the earnings are able to support that kind of a new valuation, they will just come back gradually and wait for another day, if it is coming, and you never know when it is coming. So uh, you could be, your capital could be stuck in these stocks for long periods of time, giving you pain, giving you acidity. There's no point of that, right? So like in 2018, let's go through this list. For instance, HEG, a huge gainer. The stock started from something like 200 rupees in 2017 and went to 4,500. I mean, just imagine this, 200 going to 4,500, more than 22 times in a matter of less than 2 years, 1.5 years. And then it has now spent 4 years coming down and doing nothing, and giving uh, sleepless nights to its investors who bought anywhere above 2,000 rupees, who got one chance in 2021 to get out. But people are averaging, people are waiting, and this entire capital could have been used anywhere else where some growth was coming. So you cannot keep expecting that if this is the trend, then it has to go like this only. It cannot happen, right? So make use of the market trends, get out. If the market trend starts here, you may have bought it again, but then again it may have fizzled out. Oh, that's okay. I mean, and you wait for the next rally to happen. Why you want to get stuck in these kind of stocks and lose capital and put pressure on your heart? Everybody is getting older, nobody's getting younger. So make investment an easy task. In a task which is easy on your health, easy on your mind, and also makes money. So that's at least my idea of how one should be approaching investing, instead of having marital vows with any particular stock. Similar was graphite. It started from 100 rupees, went to 1100 rupees. 11x in 15 months. और के बच्चे की जान लोगे क्या? I mean, what more can you expect from a stock in 15 months? And then now, if you're waiting here and you've seen this 1100 come back to 100, I mean, it's a complete washout. 1100 going to 1100, coming back to 100, then 100 going to 800, coming back to 377. With this kind of stock, if you have been waiting for the last 6 years, I mean, you have balls of steel to do this. And still you've got really nowhere, if you ask me. I mean, this is just maybe beating inflation by some extent. So no point of all this pain, because each rally, each different bull market will have different front runners. and the prior stocks will get discarded. Rain Industries started from 30-40 rupees, went to 475. It was raining profits like crazy, 12x. But nobody wants to take profits. Once it comes back to 125, then people say, when it will go back to 475. So you could have bought this anywhere, gotten out somewhere, made maybe 3x, 4x, 2x. Even those are great numbers. You don't need 10x, 11x all the time. Even 1x, 2x, 3x, more than enough. And then maybe started here again, you could have gotten out maybe for 30, 40, 50% here. So bottoms and tops will never come. You need to see that some part of the rally, if you can get, that is good enough, and not to waste time in stocks which are not doing anything. That is the whole idea. So that was 2018. Now I see on Twitter, and I don't want to name anybody, they are continuously pushing these stocks. There are many people just continuously pushing HEG, Rain, and Graphite, and all these stocks from 5 years because they are stuck in it, and they want these to go. But you know, you can't expect your holdings to go up all the time. There are other stocks. There are 7,000 stocks in the entire universe. So give everybody else some chance. 250 rupees, Deepak Nitrite went to 3,000, 12x. 12x in a matter of 1.5 years, maybe 2 years. Great enough. I mean, of course, this has not fallen so much also, but still, I mean, why be stuck for a year in any stock? I mean, it's just move on to the next one. Alkylamine, we wrote this stock, and all these stocks actually we have had in our portfolios in momentum strategies. We've had all these stocks, and we've gotten out at some point or the other. Alkylamine, we rode. I remember great stock, 300 rupees to 4,500, 1,600%. Catch a year, and then it has come off to 2,700. It's almost half from there. So you could have gotten out somewhere here, and used this entire year to make even nifty returns. Why, get stuck with this? Another one, DV's Lab, started from 500 rupees, went to 5,200, 11x, again down 38% and moving down. So some point, take some profits, book the profits, take a fresh bet. So 100 rupees invested has gone to 500 rupees. Take the 400 off, invest 100 again. Whenever you get a next momentum, at least you would have extracted profit out of the market. If you don't extract profit out of the market, this will happen. You know, there's a classic example is this graphite stock. I mean, the kind of move it gave, 100 to 1100 and back to 100, and people were averaging all the way down here and must have dumped here. So no point of doing all this. So as I was saying, 2018 fresh set of stocks took off. 2021 another fresh set of stocks took off, and now 2023 we are seeing another set of stocks taking off. So Union Bank, we bought this somewhere here in 50s. It is now at 83. It is going off. But from the bottom, if somebody could have bought from 24, it has already tripled, 309% up. Bank of Baroda we are holding is up 185 rupees. Started from 40 rupees. We must have bought somewhere 100 here. So again going up. Raymond's continuously going up. So bought somewhere here, almost doubled since then. So there are stocks that will continue to do very very well, but it will be periodic. Once it does very well, it will go into a limbo for 6 7 8 years. Then it will do a concentrated move, then it will go into a limbo. So you can't predict. And if you say that every stock, I'm willing to wait 10 years, but every stock will not do a repeat of what they did. Some good stocks may do it. Some good stocks may take 10 years. Some good stocks may take 2 years. Some good stocks may take 5 years to go for that next run, and some may not go for that run. So if you want to wait for 7 years and figure out that okay, my stock is not going to do another run now. I mean, the fundamentals have deteriorated a lot. So now you've wasted 7 years of opportunity cost. You've had I don't know how many Daijeans in your life, and made a mess of your own entire portfolio because somebody said that this is a good company and it should wait. So what is the whole idea of telling you all this? That please accept that momentum will automatically rotate sectors for you. It'll get out of the laggards, bring the winners into your portfolio, and you will never have to keep waiting for winners to come to place. So this is the power of momentum. Please realize this power. Momentum is the most effective factor investing in the world. There are so many research papers. You can go through them. You can study them. It has beaten all other types of investing flat. So there is no reason why you should not be trying momentum investing. But I don't want to, influence you on that. You must read about it. You must try it yourself. Only once you're convinced, then you come for a bigger exposure in momentum investing. So thank you so much for your time, and I hope you will continue to share these videos with your friends and family. And I'll see you in another one. Bye.